Hey everybody, welcome to the Smarts Money's Dollar channel. In this video, we are going to talk about the stock market, so before starting this video, please like this video and subscribe to our channel for future updates. Consider the stock market as a network of stock exchanges where investors and traders can buy and sell shares of publicly traded corporations. This is a simple way to think about the stock market. A procedure known as an initial public offering allows private companies to list shares of their stock on a market, IPO. These shares are bought by investors, enabling the corporation to raise funds from the general public to expand its operations. Investors can buy and sell the company's shares on an exchange that tracks the stock price once the company has been listed on a stock exchange and has become a public corporation. The price at which buyers and sellers of securities are willing to transact are influenced by supply and demand. The stock market can be easily understood by seeing it as a network of stock exchanges where investors and traders can buy and sell shares of publicly traded corporations. An initial public offering is a procedure used by private corporations to list shares of their stock on a market, IPO. Shares of that company are bought by investors, enabling it to raise funds from the general public for corporate expansion. A corporation becomes a public company once it is listed on a stock exchange, and investors can now buy and sell the company's shares on a market that keeps track of the stock price. The price at which investors and traders are willing to buy or sell a security is influenced by supply and demand. There are two primary categories of investment methods when it comes to trading shares on a stock exchange. As the name suggests, day trading is purchasing and selling the same shares inside a single day, with trades occasionally lasting only a few minutes or even a few seconds. The goal is to profit from minute price variations. Then there are longer-term trades or investments where the buyer keeps the shares for extended lengths of time with the intention of benefiting from the company's earnings growth over the long run. A transaction can be made in several different ways. Your buy and sell orders can be placed over the phone, online, or through an app. Brokerage companies typically charge per trade. The stock market has two key functions. First, it assists businesses in obtaining funding from the general public, often referred to as capital, by selling shares that can be used to finance and grow their operations. Additionally, it offers the investor who buys those shares a chance to participate in the company's profits. One of two approaches exists for investors to gain from stock ownership. Some stocks offer a return on the amount of money invested in the shares through periodical dividend payments, a certain amount per share. As an alternative, capital appreciation, which occurs when the stock price rises, is another way to make a return. Here, some of the points that describe stock market. Let's start. Number 3. Financial effectiveness. Exchanges promote economic efficiency by facilitating capital allocation in addition to promoting management efficiency. People have a way to invest their money through stock markets as opposed to just saving it. Thus, capital that might otherwise go unused is put to use for economic gain, making the economy more effective. Additionally, because it is relatively simple to sell one's assets, exchanges also offer liquidity. The stock exchange promotes an efficient market by offering liquidity and real-time pricing information on business shares and by enabling investors to actively determine the value of companies through supply and demand. If you want to make money in stock market, please remember to check on the links in this video description below after you finish watching this video. So let's continue with our stock market. Number 2. Corporate governance. Companies that are publicly traded on a stock exchange are required to abide by reporting requirements that are established by governing organizations. They must also publicly and on a regular basis declare their financial results to their shareholders. The management of a company are continuously the subject of public scrutiny, which has a direct impact on the company's worth. Public reporting makes it more likely that management will operate efficiently and in a way that advances the objectives of the business and its shareholders. Number 1. Elevating capital. Companies can raise cash through initial public offerings, IPOs, or the issuance of new shares to finance ongoing operations and expansion plans. This gives businesses opportunities to accelerate their growth. That's it for today. We hope you found our video interesting. If you did, please give it a big thumbs up and share it with others. Also, if you haven't already, please consider subscribing to our channel. Don't forget to turn on the notification bell so you don't miss any of our new uploads. Leave comment below, I subscribe and I will personally reply you. Check out this playlist of my videos and I'll see you in the next video. Take care.